Why do governments always ban gold during financial collapse? It's a pattern that's repeated throughout history, and understanding it is key to protecting your wealth. On the TFTC podcast, real estate developer Leon Wonkum breaks down how currency collapses happen and why Bitcoin changes everything. As someone who's studied both traditional financial markets and Bitcoin's role in them, Leon provides unique insights into protecting wealth during monetary crisis. We'll explore how all fiat currencies eventually collapse, examine what happened when gold was banned in the Weimar Republic, discover why Bitcoin is the first asset that can truly protect average people, and learn why it can't be confiscated like traditional safe havens. Before we continue, if you enjoy these breakdowns, hit the like and subscribe button for more TFTC content. Full episode linked below. Leon starts by explaining a cycle that's repeated throughout human history, one that might be about to break for the first time ever.
If you think about it, there are these cycles that happen all the time in human history. They are linked to various things, but you can link them to inflation, meaning that currencies usually inflate to a point where they collapse. And that also means societal collapse. And for the first time in history, and I think that's pretty exciting, we have an asset that can protect people.
Leon's explanation of the historical pattern of currency collapse is crucial to understanding why Bitcoin represents such a dramatic shift in financial history. Every single fiat currency, that's money created by governments, has eventually failed through inflation. It's not a question of if, but when. Think about this like a pressure cooker. Governments keep adding more money into the system, building pressure until something eventually breaks. This pattern has repeated throughout history without exception. What makes our current era unique is that, for the first time, we have a potential escape valve, Bitcoin. Its fixed supply means it can't be inflated away like government currencies. This isn't just theoretical. We're watching it play out in real time as countries continue to create money at unprecedented rates. We've established that currency collapses are inevitable, but what's even more fascinating is how governments historically prevent people from protecting themselves during these collapses.
So in the past, societal collapse that followed inflation always meant people had to rely on foreign currencies or gold, right? But using gold as a store of value is difficult if it's illegal. Because, for example, in Germany, when we had the hyperinflation in Weimar, in the Weimar Republic from 1919 till 1923, people were not allowed to hold gold. And that basically meant there was no asset in the economy that protected people from inflation and from societal collapse. And what happened after, we know. So now for the first time in history, the cycle that is repeating all the time can hopefully be broken by Bitcoin, because Bitcoin can really allow people to protect themselves.
This historical example from the Weimar Republic perfectly illustrates why traditional safe havens fail when we need them most. When Germany's currency was collapsing, they didn't just let it happen. They actively prevented people from protecting themselves by making gold ownership illegal. This wasn't unique to Germany. Governments typically restrict access to sound money when their currencies fail. It's like closing all the exits when the building is on fire. Gold, despite being a historically reliable store of value, has one fatal flaw. It's physical. It can be confiscated, banned, or made illegal to own. This limitation meant that during one of the worst currency collapses in history, ordinary Germans had no way to preserve their wealth. They were forced to watch their savings evaporate. We've now established both the inevitability of currency collapse and the limitations of traditional protections like gold. But what makes Bitcoin fundamentally different during these scenarios?
And it can also protect them from the lies of central bankers, because central bankers usually use a crisis to their advantage by saying, oh, the crisis happened because of blah, 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 blah. Usually they pinpoint to an enemy on foreign soil, that is responsible for the crisis. But now people actually see you are responsible for the crisis, and they understand it because there's an asset that has a different dynamic with a capped supply and a known issuing shadow that is basically a theory that is proving itself to be a better monetary system than the existing fiat system and the inflationary system that we've lived through hundreds and thousands of years. So it's really an interesting point for humanity here.
This insight about central bankers and financial crises reveals why Bitcoin is the first asset that can truly protect average people during currency collapses. Historically, when currencies fail, central banks use misdirection, blaming external factors rather than acknowledging the root cause, money printing. But Bitcoin changes this dynamic entirely. It's like having an incorruptible measuring stick that exposes monetary manipulation. When people can directly compare a currency that can be created infinitely against Bitcoin's fixed supply of 21 million, the truth becomes undeniable. This transparency gives average people something they've never had before, the ability to see currency devaluation in real time and protect themselves accordingly. For the first time in history, you don't need to be a financial expert or have special access to preserve your wealth during a crisis. We've established how Bitcoin creates unprecedented transparency and protection for average people, but there's still one critical question. Can't governments just ban Bitcoin like they banned gold?
If the fiat system is going to continue its downward trajectory, governments are faced with a problem. How can we get more money? And they have two ways. I mean, they have different ways, but two dominant ways. They can tax you, or they can print money, but they can tax you, or they can basically confiscate your wealth. And how are you going to confiscate Bitcoin, right? You can just leave a jurisdiction with your Bitcoin. It cannot be confiscated so easily. And so there are some benefits of Bitcoin next to it being such a good store of value, meaning it's such a good way of protecting capital, because it's just such a good asset that cannot be stolen.
This final point demonstrates why Bitcoin is fundamentally different from every previous store of value in history. When governments face financial pressure, they typically turn to two tools, printing money or confiscating wealth. But Bitcoin is resistant to both. Unlike physical assets such as gold or real estate, Bitcoin can't be easily seized. Unlike bank accounts, it can't be frozen. Unlike traditional currencies, it can't be inflated away. This creates something unprecedented, truly portable, unseizable wealth that exists outside the traditional financial system. The implications are profound. For the first time, people have a way to preserve their wealth that doesn't rely on government permission or physical storage. This makes Bitcoin not just another investment, but potentially the first effective tool for preserving wealth through the kind of monetary collapse that has repeatedly occurred throughout history. The existence of such an asset fundamentally changes the dynamics of future currency crises, giving people an option they've never had before. Should governments be allowed to restrict how you protect your wealth during a crisis? Let me know in the comments. I read every single one. And if you found this breakdown of monetary collapse interesting, you'll want to watch our analysis of how Bitcoin is disrupting the $300 trillion real estate market. Click the video on your screen now. Don't forget to like and subscribe for more daily content. Thanks for watching. Stay humble, stack sats.